Morning, everyone. Welcome to the TradeStation Masterclass. Today, we're going to do a technical analysis topic where we pick and choose studies that are built into the TradeStation platform and elaborate on them, just making sure that everyone understands why they're there and how you can utilize them. Today's topic is Futures Commitment of Traders Data, usually known as COT data. So we're going to take a look at what's available on TradeStation and maybe some custom variations of those technical ideas. For those that are new to the TradeStation Masterclass, my name is Jesus Nava. I'm the Director of Client Training and Education for TradeStation Securities. And for me, it's always a pleasure to talk about TradeStation. For those of you that have been with me for a long time, you know that these conversations sometimes go deep, sometimes they're basic. You know, we have a mix of different levels of TradeStation expertise. So I'm very glad that everyone, took time out of your schedules to be here and learn a little bit about the TradeStation technology. Before we get started, the usual disclosures, just keep in mind that every symbol and idea that we talk about in this presentation is for educational purposes only. These are not recommendations of TradeStation. Also, active trading is not suitable for everyone, and past historical performance is no guarantee of future results. Today, we're going to take a look at a custom strategy, and we're going to look at some strategy performance reports. So I want everyone to be aware that these are not guarantees that it'll always be like that. For those that are futures traders, we have the futures disclosures right there at the bottom, and also some additional disclosures about any examples that we're going to present here are just to trigger your interest and your thirst of research so that you can look into these tools a little bit further. So let's go ahead and talk about what's in TradeStation and how we can utilize it. Before we jump over to the TradeStation platform, let's just talk a little bit about commitment of traders data, what it is, and how is it useful for futures traders. So welcome, everyone. I have provided Manolo. By the way, Manolo is my colleague. He works for TradeStation, and he's going to be moderating the chat. So anything that he posts there is from TradeStation. He just posted the disclosure information. So we're glad to have him here as well. I sent Manolo a couple of documents. Well, it was a zip folder and a PDF. The PDF just contains the information that I have here on the PowerPoint, so you can have that handy just as a resource on commitments of traders data, and also a zipped folder that has some of the custom tools and a custom strategy that we've talked about in the past. This is not something new that we're presenting here, but it's always nice to bring these topics up and talk about them a little bit more. So first of all, let's define what commitments of traders data is. This is a weekly report. It is generated by the CFTC, the Commodity Futures Trading Commission, and it includes all open interest across all contracts months for a commodity, whatever it is. If it's corn, if it's wheat, if it's crude oil, it's just going to give you a report on how many open contracts are there, which is open interest. And it's a weekly report. It's not something that updates real time. Well, it updates real time because we update it as soon as it becomes available, but it's not something that it's new data every single minute. It's actually a weekly report. I'm going to take a look at that on the chart. But the report reports on 3 trader categories, which are commercial traders, large speculators, and small retail speculators. We're going to talk a little bit about these 3 categories in just a moment and provide you a little bit more detail. But the data is supplied by collecting all the different trading information that is available from FCMs, clearing members, foreign brokers, and exchanges. So the CFTC collects all this data, compiles it into a report, and makes it available every week. The information included in the report is compiled each Tuesday. So on Tuesday evening, this is when we have this information is started to be processed, but it's processed on Wednesday and released on Friday of that same week. So it's not something that is very timely, if you ask me. The data is there. So you would think, why doesn't it become available right away? But it's something that happens just like that. It's the process starts on a Tuesday. It's finalized on a Wednesday, but is released on a Friday. TradeStation on our side, what we do is that we take the data on that Friday and we publish it on a TradeStation chart. So towards the end of the day, Friday, because that's when the CFTC releases the data, we'll take those numbers and put them on the chart and back date them to Wednesday, because that's when the data actually is from. The report provides transparency and understanding of the market dynamics of futures trading. There is a reportable threshold that exists in futures markets, and anytime there is a party, and when I say party, I'm talking about a trader, an institutional firm, a hedger, whatever it may be that is trading in the futures market and trades a certain amount of futures that exceeds that threshold, there is a reporting requirement that exists, and they have to report that trade to the CFTC. And that's the data that, of course, we get a report on. And that's when we say it is transparent, because we actually see what the big players are doing in terms of futures contracts. So it does provide information about the trend and the strength of the commitment traders have towards the trend. And this is really crucial about the commitments of traders' data. Even though it's not, up to the last minute data, the fact that you have some information about what all these trading categories are doing does give you information about how committed these futures traders are to the trend. If they're more bullish, if they're more bearish, does that support your outlook? So that's what we're going to take a look at today, and how it benefits our interpretation of the markets. So the players are commercials. These are traders who trade on behalf of a business or institution, typically hedging a commodity their business owns or uses to create products. Very straightforward. These are hedgers. They're going to hedge against their production to make sure that they stay profitable. So commercials, when they sell futures contract, they're wanting for the prices to go up. So they're kind of bullish. So this is kind of inverse of what you would think a trader would do. So if a trader thinks the markets are going to go down, they sell contracts to benefit from that downward movement. However, on the commercial side, the hedgers, they want to hedge against their business. So when they sell futures contracts, they think the prices are going to go, up, and they want to make sure that they protect, the businesses against those price fluctuations. We're going to take a look at that in a little moment more when we talk about, the division of these products. Let's see. Non-commercials, traders that are large speculators, institutional investors, hedge funds, who have no business interest in the commodity, but they meet the trade size, they meet the reporting requirements, and are only trading to profit from market moves. So these are where all the big traders actually belong. Although the majority of trading happens, in some of these categories, the non-commercials are the large speculators, pretty much. This is where the big money is. Somebody that meets the trading threshold of any of these commodities is obligated to make a report to the CFTC, and hence, we call that large money. Professional investors that are trading on the futures commodity to benefit from market movement. And last, we have the speculators. Of course, speculators are traders that are going to hold positions that are not trading an amount that is reportable, but they're still, in the markets trying to make a profit. A lot of TradeStation clients will fall under this category because they're not trading as many contracts for them to be obligated to report to the CFTC. I don't know, it may be one person that does, but the majority of speculators are small traders that put in 1, 2, or even 10 contracts of a commodity and does not have to report their trades. So out of all these 3 categories, which make up the CFTC report, then you ask yourself, which one is the one that I want to follow? The commercials are the ones that are directly involved in the commodity itself. Production wise, they are in the business of the commodity, whether it is wheat, if you're, making or producing cornflakes, if you are, in the gold business because you are a jewelry manufacturer, or you are in the crude oil business because you have a refinery or whatever it is, you're directly involved with the commodity. That's the commercials. The non-commercials have nothing to do with the commodity. They're not in the business of producing or using the commodity itself for their businesses. They're just buying and selling futures contracts for their own benefit. So a lot of times, if you see these large traders trading futures contracts, you want to know exactly what they're doing. You would think that these non-commercials, the ones that are trading just to make profit, are where the smart money is, and you want to be aware what these large institutions, hedge funds are doing in the futures market to see if it aligns with your own market outlook. That's the way that we are going to approach this. It doesn't mean that we are recommending that non-commercials are the ones that you should follow. The information is there, and you should learn and decide how you want to interpret this data to benefit your trading. We're going to take a look at a few examples, and from there you can decide, how you want to approach this. TradeStation COT data. TradeStation collects and processes COT data from the CFTC on Fridays as soon as it becomes available, and backdates the data to Wednesday. We're going to take a look at the chart and see where the data is updated, and you're going to see how the shift in the data numbers happens on Wednesdays, not because it's released on Wednesdays, it's actually released on Fridays, but we make it available as it was posted on Wednesday. There are 3 indicators that are built into the TradeStation, or that are built into TradeStation that display COT data. Those are the COT net position, the COT total position, and the COT total position PCT. You don't have to do anything to get these indicators because they are already supplied with the platform. So we're going to take a look at them and what they are showing you. And these indicators in COT data are best used on weekly interval charts. The reason for using a weekly interval is because it's weekly data, and you can see how it shifts from one bar to the other. Otherwise, if you use daily, I'm not sure if it works on minute data. I don't think it does. But if you use daily charts, you're going to have the exact same COT numbers for a full week, from Wednesday to Wednesday, because it only updates on Wednesday. So reducing the time frame to a weekly interval will allow you to see updates every single candlestick. The COT indicators that come with TradeStation allow you to display the data with or without options contracts included by setting a study input. If you use them out of the box, it will not include options contracts. There's options on futures, right? But if you want to include options included in those futures, then it's just a matter of switching the input, and we're going to take a look at that as well. So how to trade using COT data. Before we go into the details on how to do it, because this is just a slide giving you different interpretations on how to use COT data. Let's go over here to the TradeStation platform first and show you where the indicators are, and also show you some of the custom indicators that we have supplied you. Let me go over here to my platform. All right, this is a weekly chart of corn. You can see the symbol right here on the top left corner. I'm going to, well, first of all, let's switch it to a daily, because I wanted to show you how the data looks on a daily chart. I'm going to go to studies and add studies, and everybody here can go to their platforms and see where this data is. I'm going to go to the C's. Here it is. So all the COT data is going to be right here. They start with the letters COT. And remember that COT stands for commitment of traders. Let's see the total position first. We're going to take out the total position. We're going to see then the net position and then the total position percent. These are sorted in alphabetical order, but I'm going to start off with the total position, COT total position. I'm going to click OK and OK. Okay, so Even before we jump into, looking at what all this data means, this is, corn. I want you to take a look at the way that the lines appear at the bottom. Let's focus on this blue line. I'm not going to identify what the blue line is, but you can see the value here is 1,251,495. If I click on the background of the chart and I hold my mouse button, I get the data tips window, and inside the data tips window, you also see that same number, 1,251,495. That's the number that you see in blue. And if you check the date on the top left corner, the date on that bar is May 22nd, which is yesterday. Now, we don't have a value here for today's bar, which is the 23rd. And I believe it's because it's a real-time bar. And there's no real-time information on COT. And that's why it doesn't update up to the current bar. It just updates on the closing of the bar. And the most recent closed bar is the one that closed yesterday. And that's where we have the most recent update on the COT data. However, if you check the value, the 1,251,000 contracts, and compare it to, the one or the data before, the bar before, notice how the bar before is the bar from Friday, May 19th, 2023, and the value on the blue number is still the same, 1,251,000. And it is going to be the same for the 18th, and it's going to be the same for the 17th. It's only different once it goes to the 16th. So from the 16th to the 17th, there is an update on the COT data. So what date is the 17th? If I go here to my calendar, we know that the 17th was a Wednesday. And as we learned from the PDF, and you can, Google this as well. You can Google, how often does the CFTC release COT data? And you'll see that it releases the data on Friday. So the data was released on the 19th, but it was data from the 17th. That's when the data is processed. So what TradeStation does is, as soon as it becomes available on the 19th, we'll put it on the chart, but the update will be from Wednesday. So we'll backdate that data so that it reflects, the data from the day that it was published. So that's what we do here on TradeStation to keep the data update as soon as the CFTC becomes available. But the fact that it updates on Wednesday doesn't mean that it's released on Wednesday. Just keep in mind that data is released on Fridays and then backdated for Wednesday when the data is processed by the CFTC. Switch is asking, is COT study available in web version? It is not. It's something on the desktop only. And Lawrence is asking where the studies are in 9.5, and they should be there as well. If you go to Insert Indicator, you should be able to find COT studies there as well. Yeah, thank you, Adel, for helping me out here for COT. That stands for Commitments of Traders. So let's go ahead and take a look at this one right here at the bottom, because as we pointed out at the beginning of my presentation, COT is how committed are traders in terms of this particular commodity. We're looking at corn, and we can look at different commodities if you want, but let's just focus on one in particular, and corn is an example. And as we pointed out, every single day, this COT value may be the same if we're looking at a daily chart. So let me change the time frame here to weekly. And as soon as I do that, of course, the data will load right here at the bottom, and it will give you more historical data. You can see the years in the timeline. This data goes back to, let's see how far this data goes back. By default to 2013, but I can go back further if I need to, just to look at the historical data. What we're seeing here is the total position, and that's including, long and short positions. These are just open interest, open contracts. It doesn't make a distinction whether you're long or short the contracts. It just tells you how many open contracts are there. And if you look at the three lines here, the blue, the green, and the red, they do correspond to those three main categories that we talked about: the commercials, the non-commercials, and the speculators. Depending on the trading platform you use, some of these groups may be identified a little bit differently with a different name. However, on TradeStation, that's the names we use: commercials, non-commercials, and speculators. And as you click on the background and you hold, you're going to see the three numbers. The blue one is the one that refers to the commercials. The green one is the non-commercials, and the red ones are the speculators. And you can see their total position. Total positions, open contracts. As we said earlier, there's no distinction as to is that a short contract or a long contract, but it does tell us, how many contracts are outstanding. And as you can see, the commercials do trade in the futures market more than any other group, at least for corn. Those are the ones that are holding the most contracts right now, looking at 1,251,000 contracts. The non-commercials, which are the green, are holding about 613,000, and the speculators, in this case, these are reportable speculators, are holding 284,000 contracts. All right, that's the rest of contracts that are traded there. So let's let's take a look at other indicator and try to decipher what it means. Let's go here to studies, add studies, and we're going to take a look at net position. That's when we start defining, what's the net position on each one of these groups. I'm going to click OK and put it right there at the bottom. The indicators are going to look a little bit similar to one another. I think the colors should correlate. I'm just moving, the divider here a little bit more so we can see more of the indicator, and that just adds to the clarity. Okay, so all right, so the 1,251,000 contracts that the commercials here were holding gives you a net of 102,625. Why is the net 102,625? At this point, or these indicators don't tell me what their long position is versus what their short position is. How many out of all those 1,251,000 contracts, how many are short and how many are long? Well, I don't have the specific numbers. I could create an indicator that pulls that data from the report and tells me, okay, there's 600,000 contracts long and there's 700,000 contracts short. If that's the case, then that gives you a net. So we add up all the shorts plus all the longs, net them out, and this is the actual net position, 102,625. But notice that that number, that blue number, is positive. So in this case, the commercials have a bullish, or at least in this case, a net long position of 102,625. All their contracts are not long, but their net position is long at this point because they have more long contracts than they do short contracts, and their net position is 102,625. If we look at the non-commercials, those big institutions that are trading the futures market, we look at the green here, and the non-commercials are net short. Even though they're holding, over 600,000 contracts, when we add up the long and the short, gives us a net short position of 48,000 contracts. And the speculators right here at the bottom are a little bit lower than that at a net short of 54,166 contracts. So at any moment, you can see where each one of these groups are. Are they bullish? Are they bearish? Based on what their net position is. Or even, the fact that, for example, the non-commercials, which is the green line right here, the fact that the non-commercials are at a negative 48,459 may not be so relevant in itself, but it's more significant when you look at that number in relationship to what's been happening in the past. So as the non-commercials are dropping from this high a few weeks ago, in April, they were net long 500,000 contracts. They've been dropping that long position for a while. Does that give us an indication of what they think the market's going to do? Does that, play into what their market sentiment is? And could it affect, the way that you're looking at the markets and the type of trades that you're putting into corn? That's what we're looking at. That's how the COT data should be interpreted in terms of what's been happening historically to these values. Are they going up? Are they going down? Are you becoming more bullish or more bearish? Or are you less bullish or less bearish? There's different interpretations of looking at the data. The third indicator that is provided with TradeStation, let's go here to add study. It's total position percentage. I'm going to click OK. And what this indicator is telling you is how many contracts are each of these groups holding out of the total. So the blue one is at 58.2%. So if you add up all the contracts, in this case, if you add the 1.2 million plus the 600,000 plus the 284,000, if you add that all together, that'll tell you the total number of contracts that are reported by the CFTC, right? If you take all those contracts and then you calculate percentages, it tells you that the commercials have 58% of all the contracts out there in the market. Does that make sense? So it's interesting that we can get that insight as well. Now, of course, these indicators that are provided by TradeStation, they always report on the three different categories. They report on the commercials, the non-commercials, and the speculators. You may be interested in one of those groups only, and maybe drill down on what that group is doing. And of course, you have access to easy language to modify these indicators in any way, shape, or form to make them calculate what you're looking for. If it's, the net change of one group over the total of their contracts, that's something that you can calculate because all this data is available for you in easy language. There are two custom indicators that I provided the class here, and they're part of that zip folder that I shared with the class. Manolo, if you have that zip folder, please share that in this chat. Again, the zip folder. It has the indicators and it has a strategy that we're going to look at. But let's say, for example, playing or drilling down on what I said earlier about the non-commercials. The non-commercials, these are the big institutions that are trading over a particular threshold and are obligated to report on that trade. That's what I called earlier, smart money. Let's say, for example, that we want to focus on that group because we also want to benefit. We also want to benefit from price movements, and we're going to assume, and then notice that this is just an assumption, that that group is the one that would probably know where the market's headed. So let's drill down on that group. What I'm going to do is I'm going to remove the percentage one. Let me add the custom study that I shared with everyone here. So Manolo hasn't shared that link. Manolo, if you're listening, let's share that zip folder link again. Actually, I can probably copy it from here. I think he already did, right? Yeah. All right. Thank you, Manolo. That's the zip folder. So these indicators that I'm going to use right now are not part of the TradeStation platform, but you can download that zip folder and you'll find the indicators in there. In fact, you'll find what's called an ELD in there. The ELD file, it's something that TradeStation recognizes and knows that it's part of the platform. It's ELD stands for Easy Language Document, and you can import that into your TradeStation platform. So what I would recommend, if you open up that zip folder, you've never done this before, open up the zip folder, and there's an ELD file there. Save it to your computer somewhere. You can save it to your documents. You can save it to your desktop. Once you have it saved to your computer, and you have the TradeStation desktop open, double click on that file, and it should launch the import wizard in TradeStation, so you can have that indicator imported into your TradeStation platform. Once you do that, you go to the indicator list, and all our masterclass indicators we name with the @ symbol, MC. So a lot of the masterclass indicators are going to have that prefix, so they're grouped together. So @ MC. First of all, I'm going to look at non-commercial net change. So that's the group that I want to concentrate on. I'm going to click OK. And OK. And this indicator, what is it doing? Okay, so let me bring this up a little bit. So let me, this is the net non-commercial net change based on a percentage. So we're looking at total position, that we're looking at the net change right here. So let me close out the total position. I'm going to remove that indicator. Okay, so there's no confusion. Let me erase my divider here and my divider right here so that we can see more of these indicators. All right, so the non-commercial net change is an indicator that measures percentage change from one value to the next. And it's a very, very interesting indicator because you can see what the non-commercials stand is from one report to the next. A couple or a few weeks ago, you can see these two significant red histogram bars is because what happened to the position on the non-commercials. You can see the green line, it went from a positive 105,000. You can see the green number right there in the data tips window. It went from 105,000 down to 24,000. And then from the 24,000, it dropped to negative 60,000. So that drop between a positive to a negative is reflected right here by a percentage. The first drop, we can see the measure right here on that histogram. It is 14%. And the next one is 14% as well. So it had two drops of 14% on the percent change, and we can see that reflected here in this indicator. So anytime there's a significant change in what the commercials or in this case, are the non-commercials, the green line, anytime you have a significant drop or increase in what the non-commercials are doing, that gets reflected right here. And it measures the impact of that drop or that increase. Anytime that there's an increase higher than a certain percentage, this indicator is color coding that bar based on that percentage. Of course, those are user-defined thresholds that you can change if you want. Like, for example, if you wanted to look at something higher than 5%, maybe only look at the ones that are higher than 7%. Let me double click on this indicator. And inside the inputs, we have those thresholds. The upper bound, we can make it 7. And the lower bound, let's make it a -7. Neutral colors, light gray, bullish and bearish color, those are also user-defined, green and red. I'm going to click OK. So now notice that I've shifted those yellow lines to +7 and -7. And the color, of course, relates to where my thresholds are. So it's something interesting that I can modify based on the commodity that I'm trading, because maybe the significant drops and increases that you see in non-commercials are only, on corn. So that behavior may be different on other commodities like wheat or crude oil. So that we give you the flexibility of modifying that number so that it aligns with the behavior of a certain commodity. But here, being attentive to those big drops or increases of the non-commercials does tell you something about where they're headed, what's happening to them. Are they shifting their position? Maybe an isolated increase like right here may not tell you much, but if you see a sequence of different green lines, and you can see that green line going from a negative all the way to a positive and a very significant, increase in value, then that's telling you something. What's going to happen? Does that relate to market movement here in the candlesticks? So those are things that you should think about. Now, the other indicator that I provided, let me go here and go to studies, add studies, is going to be this one that's called @MC, non-commercials net position percentage. Let's go ahead and click OK. All right, so let's take a look. I'm going to remove the one that I talked about and just leave this one. Okay, so net position percentage. What this indicator is telling me is, let's see, the commercials. The percentage, this is their net position percentage, meaning that what's happening to their net position. You can see that the line kind of looks similar to the green line. See, the green line over here tells you the net position number, but this is the net position percentage. So if you look at this -7%, it means that right now, their net position is 7% of their total, and that sometimes is important to know. A lot of times, if you look at numbers that are pretty high up here, like 79, means that, 79% of their net position is long at the moment. So this is pretty cool indicator that measures the percentage of their net position as in terms of the total, pretty much. So it's pretty cool indicator to see, because a lot of times, this 7% may be really close from the total. That percentage is really small. But when you have a higher percentage, that means that there's an imbalance in the way that they're holding their contracts. When there's a big imbalance between the long contracts and the short contracts, of course, that's going to be reflected on this percentage. So that's something to look out for. If the non-commercials all of a sudden are all long, that could tell us something about what the market is doing. So those are things to consider. Notice how this big portion where the non-commercials are, where the percentage here was really high, you can see how it correlates with this high market movement of corn, from September of last year all the way to April, not last year, this is September of 2020, all the way to, May of 2022. So it was a big movement in the corn from those dates, and we can see how the non-commercials were reflecting their position at that precise moment. Okay, let's see. Let's go ahead and take a look at the strategy. Let me remove these indicators and go over here to this workspace, because I wanted to talk a little bit about the strategy and how you can use this in back testing as well. Shinya is asking how to remove a strategy that you added earlier to keep things tidy. To remove a strategy, you can do it from the development environment. We're going to go there in just a moment, and I may show you how to do that. But here on the left-hand side, I have a radar screen with some futures contracts. These are continuous contracts, by the way, and they're custom continuous contract. How can you tell? Because of the symbology. Take a look at it. Has the root of the symbol at, for example, that bottom one is at SI, then it has an equal sign 11INN. Those additional characters, the equal, the 11, and the INN, just tells you what the custom futures is, how it's calculated. Those symbols that I added here are non-adjusted. I'm not sure if you're aware of this, but the data on TradeStation, at least futures data, gets back adjusted every time that you have a new contract. And this is for continuous contracts. So the data gets back adjusted. There's a factor that gets applied to historical data, and some of the prices may get out of whack, especially if you are trying to run a strategy. You may be generating trades on prices that never existed. So for a historical back test on a continuous contract, it's important that we control the back adjustment portion of these continuous contracts and decide, in this particular case, decide that I don't want the data to be back adjusted. I just want it to be exactly how it happened historically. And that's why the symbols here look a little bit different. If you need a little bit of help, creating these custom futures, you can ask us. You can, talk to our technical support team, and they'll walk you through it. But the way that I did it was data. Is it data? Yeah, add symbol right here. I was looking for edit symbol, but data, add symbol. So from here, instead of typing the symbol yourself, go to lookup, click on custom futures, type in, the commodity that you're looking at. Let's say, for example, that I type in the W for wheat. It tells you all the futures or the months that wheat is trading. And over here is where you change, the back adjustment method. So absolute difference is how we back adjust the data. So if there's a difference from one contract to the next, the absolute difference gets applied to all the prices historically. Of course, you can control that and say unadjusted. So these symbols that you see here on the left-hand side, the symbols that I've created here in custom futures and made sure that it was unadjusted so that the strategy was firing off on prices that actually existed. Okay. So a little bit about, custom futures so that you can do your back tests appropriately. Okay. In addition to that, let me go here. And what we're looking at in this example is a simple moving average strategy. This chart in the middle is just using a simple moving average and generating trades anytime that there's a crossover. Let me go ahead and maximize this so we can see a little bit more. So yes, so for example, right here, this is silver. It actually crossed over the moving average and it generated a long trade. That long trade was kept until we had a cross under the average, and then we take a short trade. So it's a strategy that always keeps you in the market. It flips you back and forth between a long and a short trade, but it's simple and it's just based on that moving average. This is a historical back test that goes back to the year 2018. So we have 5 years of historical trading activity, and we can pull up a strategy performance report. All right, so if I had traded this strategy starting 5 years ago, based on this report, remember that we talked about the disclosures at the beginning. This is no way a guarantee that it'll happen the same going forward, but based on this simple strategy that triggers back and forth between long and short, which it's a little tricky because when I think about this, you may be holding one contract at any given moment. And for example, this is a long period to hold that contract, right? Rollover may happen somewhere in the middle, or maybe the contract expiration may happen somewhere in the middle right here, forcing you to close that contract and open up a new position on the next contract. That additional transaction is not reflected here in this historical backtest. So those are things that you have to keep in mind and try to always visualize some of the differences in the strategy or how that behavior could affect the strategy performance. But here we have a net profit of $58,000, a profit factor of 1.36. How can we, by the way, this is a 30-bar moving average, nothing fancy, simple moving average, 30-bar. In this case, since we're doing a daily, this is a daily chart, those 30 bars represent 30 days. It's a 30-day moving average. But the idea here is to use COT data to affect when the strategy is entering or exiting the trade. And the way that it does that, let me show you what the programming code looks like. This may be a little bit confusing to some of you, but I wanted to show it here so that you know exactly what's happening. By the way, this code is available to you. You can open up the strategy and see how it's programmed. But we're looking at a bullish level and a bearish level that gets calculated based on the COT data. And I'll tell you exactly how that's measured. First of all, we have a moving average bullish or moving average bearish that is just based on where the close is in relationship to the moving average. So if we're above the moving average, we're going to call that bullish. And if we're below the moving average, we're going to call that bearish. All these non-commercial lines that you see here from line 17 to line 23, this is how Easy Language requests the data from the database and manages the data. So over here, you can see that we're getting information from the report. We're making the calculation here. This is to get the net position. There's some notes here to the right-hand side that help you understand this. But what we're trying to determine is this. Let me show you exactly We're trying to calculate the change. Take a look at this word right here. The change in net in non-commercials, NC, that's what it stands for. Change in non-commercials net position. So we're looking at the net from one period and comparing it to the net the prior period, and then dividing it by the total. So we're looking for a change in the net position, very similar to what we saw in that custom indicator that had the histogram. You know, the change from one period to the next must exceed a certain threshold. If you guys remember, I'm not sure if you guys remember, but let me pull it up here so that we can visualize it a little bit better. I'm going to go to studies, add studies. The one we were looking at is this one. No, that's not the one. What I wanted to check is the other one. Studies, add studies. It's this one. Okay, so this is the indicator. Let me remove this one so there's more clarity. This is the indicator that strategy is based on. You know, in addition to looking at what the moving average is doing, we also want to take a look at the change in the non-commercials. What are the non-commercials doing? Are they moving from one, are they moving in the direction of our trade? You know, so think about this. If you have a moving average strategy like the one we have, and all of a sudden we have a crossover, which is a bullish signal on that moving average. But then the strategy says, hold on, before taking that bullish trade, I want you to check what the non-commercials are doing. And if this bullish trade, this moving average bullish trade aligns with what's happening to the non-commercials in terms of commitment of traders, then I want to take the trade. So in this code, what the strategy is doing, if we are MA bullish, meaning that we get a crossover on that moving average, and the change in the non-commercials net percent open interest is greater than our bullish level. In this strategy, you have the control over what is considered a bullish level. The input bullish level, it starts off at 3. Of course, you can customize that, but it needs to have a change of at least 3% from one period or from the current period when compared to the prior one in order for us to take that trade. So as the COT data here, it's more like a confirming type of indicator that tells you, hey, you should take that bullish trade because we had an increase in COT data. So we're kind of aligned with the non-commercials. That's pretty much what it's saying. And, you know, on the exits, we also see that we introduce an element of exiting the strategy. So we're not only flipping back and forth between long and short. Now we're telling the strategy, well, if you see a change in the commercial or the non-commercials net position, then I want you to exit the trade. So if the change is greater than the exit level or less than, you know, if it's negative or positive, then I want you to get out. If we do that strategy, let me go over here to my TradeStation. So this middle chart is the one with the simple moving average. I'm going to go here to the one on the right, and this is the one that has that filter applied. We can see that in some areas, like over here, excuse me, we can see some exits. So here's the cover. You know, we had a short trade. Over here, we had an increase in price in silver. Maybe our COT data was moving up. So it was opposite to my short trade and it closed it out. But then the strategy generated another short and it took me out again because it didn't align with the COT data. Now that of course was a bad decision because it tanked a little bit later, but at least you can see that the exits are actually factored in. Now, if I look at the report or the strategy performance report from here, you can see that there is a drop in performance. So I started off, you know, talking about the example and being very excited about what the COT data filter would do to this strategy. But in this particular example, my performance actually dropped. But still, I'm using a filter that confirms the signals from the moving average. In strategy development, you're going to encounter these types of situations where you think, something's going to improve your strategy when it doesn't. I know many of you from, that are connected here have, dealt with strategies for many years, and the effect, that it may have on your strategy performance to do a change like this. Let me restore the size of this chart because I can quickly click on any other one of these symbols. Let's take a look at sling hogs, for example. The root of that symbol is LH. If I were to trade only the simple moving average, let's go here to data and strategy performance report. So this is the report on lean hogs. You can see that there's a loss of 42, the net loss of $42,000. Our profit factor is 0.67. There weren't that many trades though. Let's see. Oh, there were. In 5 years, 143 trades. Not a good report. But if I were to click on this chart, so this is the nice thing about having two charts, in the background that you can click on, because the strategy performance report automatically updates to that other strategy. On the chart here on the right-hand side is where I have the same, concept of a moving average strategy, but with the COT data filter. If I were to click on this chart, my strategy performance report recalculates. You can see that I don't have such a massive loss. I still have a loss, but not as massive as it was before. And our profit factor here increased a little bit. So still not a good example to show, right? Let's go here and take a look at gold. Let's look at the report without the COT data. So here's a strategy without the COT filter, $58,000 net loss. If I go over here to the example with the COT filter, barely a break-even strategy, but it does improve it a little. So COT data is something really interesting to look at, especially if you're a futures trader. Introduce COT data to see where the non-commercials are headed, or if you feel like you should follow what the commercials are doing, then that's up to you to decide. But in a nutshell here, let me go back here to my PowerPoint. How to use COT data? Use that as a directional guidance or filter to time entries and exits. It helps identify the trend by knowing what big traders or the non-commercials are doing. You can be bullish, so traders are long or increasing their long position. So there's multiple ways to identify a bullish situation. It could be that they're net long, or that they are increasing their long position, or if they are short, they could be becoming less short. An increase, I'm going to say an increase, I'm looking at the slope of the line. If the line is becoming less negative as the time passes, that's indication that you're becoming less bearish and a little bit more bullish to that extent. So depending on how you look at it, a bullish condition can be identified looking at different values. A negative commercial net position is considered bullish. So interesting. The negative commercial net position is considered bullish, and on the opposite side, a positive commercial net position is considered bearish. And of course, we're looking at the slope of net position. I think we talked about that, and also at inflection points or flips. When one of the groups is going from a negative to a positive side, or vice versa, when the group is going from a positive to a negative, what happens then? Does that align with market movement? Let's go ahead and take a look. Let me go here to the chart, and let's go here to this workspace, and let's look at this is an indicator, MC COT, net position percentage. That's the net position percentage. Let's go ahead and take a look at another one. Add studies, one of the built-in studies, which is COT net position. Okay, because that one that I just added, the blue line that's right here at the bottom, that is just looking at the non-commercials. But you know, when we look at inflection points, for example, take a look at the non-commercial line here. I guess it does pretty much align with what I see here at the bottom. Inflection is when you are net short, but all of a sudden your net long goes to the other side. And you can see that these inflection points, when it crosses zero, sometimes align with the big market moves. You know, that inflection point right here back in, when was this? This is August of 2020, was, you know, a very big indication of what the market would do going forward, you know, and the fact that that net position on the non-commercials stayed positive, it's very telling. You know, and then you can probably correlate all these inflection points to big market moves in the past. In this case, we're looking at corn, but take a look at other commodities to see if COT data can be used. One thing that I also wanted to add is that it's been discussed in many other platforms, you know, not only here, but the COT data may be difficult to correlate to some of the financial futures or index futures like the NASDAQ, the S&P. I was looking at some examples and it was difficult to find correlation between what was happening to the COT data and what was happening in the markets. And the data is there. You can pull up, you know, COT data on the S&P E-mini, which is one of the most traded futures contracts that are in the CME. But correlations are difficult to pinpoint on those financial instruments. When you're looking at agricultural commodities, it seems like there's a very direct correlation between COT data and what's happening to the market movement. So take a look at it, always analyze the data, practice, you know, using, of course, the simulated account and also backtest ideas just to see if you find any sort of correlation. All right. That's it. That's my presentation for today. I wanted to give you a little bit of an understanding of what COT data is. Also tell you that it's available on the TradeStation Data Network, and anybody can pull it up. We looked at, you know, the built-in studies that are on COT. Those are part of everybody's TradeStation. And we also supplied, you know, a suite of custom studies, 2 indicators and 1 strategy that uses COT data and manages data in a different way. So make sure that you drill down and see if you can leverage those ideas to your benefit. Guys, I want to say thank you for spending this time with me. We have master classes happening every single Tuesday, so make sure that you look at the schedule to see what's upcoming. Tomorrow we have a getting started class. So if you're just getting started with TradeStation and you felt like today was a little bit too much, join me tomorrow, 10 a.m. in the morning. The class is a little bit simpler, and we'll just highlight, you know, functionality of the TradeStation platform and how you can utilize it. But again, we're here on a weekly basis. Make sure you check the schedule and join us in our next class. Thank you for joining me today. Have a wonderful afternoon. I'll see you next time. Goodbye, everyone.